All right, good morning, everyone. It is 8:53 in the morning of October 12th, 2022, and this is my pre-market strategy session. Big news this morning. Oh, it disappeared. Where'd it go? Let's see if I can refresh. Okay, wholesale prices rose 0.4% in September, more than expected as inflation persists. Excuse me. Yeah, so that's the deal this morning right now. Inflation is still rearing its ugly head, which means the market is expecting the Federal Reserve, to be hawkish on rate hikes, which means there will be less liquidity sloshing around the financial system. Actually, there'll be less liquidity sloshing around the economy uh, in every little sort of aspect of the financial machines that really kind of drive the economy. So that means less money allocated to buying stocks. You know, in particular, right now we are coming into earnings season. It's on Friday, so there's really 2 trading days left before earnings season kicks off. And a vast majority, the closer we get into, or the closer we get to earnings season, the closer we get into, I think earnings season lasts about roughly 4 weeks, 6 weeks, 4 weeks, something like that. And there are you can't companies are not allowed to buy back their stocks during this blackout period, 30 days prior to an earnings release. Companies are not allowed to buy their stock. So we're in a stock buyback blackout period right now, or we're well into it for the majority of the companies that are going to report soon. And so there's that kind of takes away one of the buyers from the market. So things are bearish, and markets have a tendency to crash from oversold conditions, and we are really like we're in. I mean, basically, we're two on the relative strength index. We're 2 points away, or 2.31 percentage points away from oversold. So I wouldn't be surprised to see the generally speaking, the stock market to go down here for 3 or 4 weeks. So it's bearish, you know. Let's see what else is going on. So the 10-year and the 2-year, whenever we get this rise, so let's see, Friday the 5th of August to Tuesday, September 6th. Let's look at the cues from Friday the 5th of August. Let's see, August 5th right here to September 6th right here. So let me just shade that region out a little bit here. August 5. I'll go with the closing price. September 6th. To the close on the 6th. That's an 8% down move, or almost 9% down move, while the yield curve was making an up move from here, from August. Did I do August 5th or September? Oh, that's August to September. Let me try that again. August 5th to September 5th. July, Tuesday. Where's August 5th? Yeah, there it is right there. Okay. Yeah, okay, I had it right. So here's August 5th to September 6th. And in that same time period, the 10-year, 2-year was going up. You can see here the general trend was up, right? So when the 10-year, 2-year the delta decreases and gets closer to zero, it's negative for the market. When it drops down, it's actually positive for the market in the short term. There will come a time when it breaks above zero, and that's when we'll start seeing the Qs really crash. So here we are. It's bearish. It is bearish. Don't fight the Fed. The old saying goes, don't fight the Fed. So for all those years, for as long as I can remember, whenever the Fed is cutting rates, and it's generally speaking in the past 30 years, it's been cutting a lot more often than it's been raising rates. And so here we are where it's raising rates. And for the longest time, it was like, the silly bears, with their shorts. And it's generally true, you look at a stock chart and from bottom left to top right, that's historically just what it does. There are definitely some downturns and so forth here, no doubt. But generally speaking, if you buy for the long term and you hold, it goes up. Well, that's about to change. I think it's temporary. I think once we get on the other side of all this crazy stuff that's going on in the world and so on, the direction will be up. But for the time being, the direction is down. So, all right, everybody. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell. I will see you at tomorrow morning's strategy session. I am out.